Let me ask you a question. What is the only way in which you make money if you buy a stock or an index or an ETF, or if you buy calls, or let's call call spreads, options? Right, the only way you'll make money is if the underlying asset, the stock, the index, the ETF, actually goes higher. Today I want to show you guys an alternate way in which you can consider structuring some of your trades in which you can actually make money whether the stock goes higher, sideways, or even goes against you a little bit. So let's have a look. So here we're looking at a stock. In this case, the stock price is American Express, ticker symbol AXP. What I did last week, this is actually the spotlight trade of the week for my Clubhouse members. So last week on April 20th, the company reacted to its earnings report and started moving higher. You can see this here is the post-earnings reaction, so after earnings were reported. Well, if you look at this through a very simple technical lens, you can see that the result of this post-earnings rally is a breakout in what I would consider to be a continuation of the trend that had been in place here prior. So now one had three options or three potential ways of expressing a view, maybe more. But number one, you could have just bought the stock in hopes that the stock will continue to go higher, in which case you would make money. One could have bought calls or call option spreads, in which case too, the only way you'd make money is if the stock actually goes higher. And again, if we are correct in the underlying assumption that this move here after earnings on April 20th of 2017 is a continuation of the trend that it had been in prior, then of course the trade over time will make money. Of course, with options, if you buy them, you always have to consider the time frame within which you operate, because you do have theta working against you, or something called time decay. Now, another way of looking at it, and this is what I specifically did, I went out and instead of buying options or buying the stock, I sold what's called a put, an out of the money put spread. So I specifically sold 77.50, 75 put spread. In other words, I was making a bet that instead of saying that the stock is going to go higher, I was simply saying that by June expiration, the stock isn't going to fall much below $77.50, or about actually $77 more likely. In other words, I could make money in this stock whether the stock goes higher, whether it goes sideways, even if it goes all the way down to $77 at June expiration. Now, $77 from when I'm recording this right now is about almost 5% lower, almost 5% lower. In other words, even if I'm 100% completely incorrect about this trade, I could actually still make money as long as the stock doesn't drop more than 5%. So there you go. Just wanted to give you guys a little bit of insight of an alternate way in which one could consider structuring trades. So that's just one way in which you can express your views in terms of trades if we have an opinion about an underlying stock or an ETF or an index. You don't always just have to buy a stock or buy options. You can also be a seller of options. If you want more information about that, I do have a course. You can link to it down below in the comment section. It's called the Options Income Secrets course, where you can learn how to generate income being a seller of options.